Hi guys, this is Teacher Party. Happy New Year. Happy New Year, Happy New Year. Guys, I just wanted us to talk about the conceptual framework. So before I just started presenting, so I'm born again Christian, guys, so I pray a lot. So I was praying for anyone who's gonna watch this video that they may find the understanding they desire in terms of accounting. Be it you're a first year student, no resources, or you're a first year student at a university and you're actually thinking, okay, I don't understand what they're talking about and they're moving too fast. And if someone can make it easy and show me what is conceptual framework in my everyday life, because guys, when you're at university you are learning accounting that is corporate accounting that you are yet to see, but you are being taught as if you've seen it. I don't know if you understand the logic. So sometimes things seem as if they went over your head and you're like, but in matric I was following everything, but now it seems like I don't follow anything. Don't worry, I'm here to address that. You will love accounting and you shall certainly qualify if you listen to the advice I share, and also other professionals that are sharing in the internet platforms. Guys, if you're doing first year into doing first year accounting, remember, accounting is split into two. Sometimes there's accounting for those who never did accounting, and there's accounting for those who did accounting. So I'm just talking on for those who are doing accounting and they did it in grade 12. This is where everything begins at university. We're building on last year's foundation, grade 12 foundation. And now at university, you'll notice a lot. You're not going to be taught process many a times, but you're going to be taught the concept behind the process. So the concept becomes key because it leads the process. Whereas at high school, going backwards, it was actually not that way. It was definitely not that way. I'm going to try and keep this video under 10 minutes so that you guys can just touch base with this and then move on with life. So accounting at university touches on concept. The concept becomes the leader of the process. It's not the other way around. So once you miss the concept, you lose on the process automatically, and you'll be asking yourself, how did I fail this test? You missed the concept. Go back to the concept. It informs the process. So guys, the conceptual framework, it's one thing you're going to meet at university in your first accounting class. They're going to talk about conceptual framework. That's if you're studying towards chartered accountancy, professional accountancy, chartered management accountancy, and certified chartered accountancy. You're going to have this as the fundamental introductory class that you need to in fact, introductory lesson in your class that you'll have to go through before anything else unfolds. Okay, so conceptual framework, ladies and gentlemen, is not that difficult. Think of K53. If you're in South Africa, or in the world, K53 does not talk about the car only. It talks about the robots. It talks about the road. It talks about the road signs. It talks about roadworthiness. There is many components that are covered in K53. Let me show you now. Then I think it will stick to you easier if I show you something that's similar to conceptual framework. See, it's vehicle controls, it's road signs, it's rules of the road. Remember, before you acquired a driver's license, you didn't really care about K53 because you were not responsible for driving. You were just the passenger. You were just consuming the service. Now that you're the giver of the service, you must know all these rules. That is conceptual framework in a nutshell, guys. It has all these rules, all these concepts that must be adhered to when we're doing financial reporting. Same way as K53 will be saying, when a robot is red, do not continue, drive on this side of the road, not on the other side of the road, yield, stop. That is a conceptual framework in accounting. It's exactly that. It gives you the concepts of what you must do, what you must not do, what is the premise of preparation of the financial statements, the going concern principles, the prudence principles, timeliness, integrity. It touches on many things that the financial statements have to adhere to, the completeness, the notes to the financial statements, the set of financial statements, the elements of financial statements. It's that guideline, it's that body of work that gives you a clear roadmap of what are the rules of compliance when you are preparing financial statements or financial reporting. It stipulates, you look at the rule of timeliness. It just says financial statements, they must be given within time. It's no use producing financial statements. It's 2023 now, the 3rd of February. It's no use producing financial statements that relate to a financial period ending 31 January 2023, and you only produce those financials in 2025. They are irrelevant. So that information is not going to help anyone do any decision. Time has passed, critical time has passed. So all those rules, they are embodied here in the financial statements. And then it talks about the concepts that ensure that there is consistency in treatment of certain transactions. Guys, as long as you do accounting, as long as you do auditing, as long as you're doing tax, consistency is always going to come up, because you can't be doing this year and the next year you're doing that without any valid reason that holds water. And also there are some transactions that are new, and conceptual framework continues to address the assist these companies to address these matters. We before there was nothing like cryptocurrency, and that had to be regulated. How do you report that? How do you report that in financial records? There was COVID-19 that had to be covered as well. So this is the body of rules that if we're meeting new things that are developing, that are shaping us in reporting, then how do we go about reporting? How are companies assisted to ensure we report accurately and we provide a fair representation in terms of financial reporting. So guys, when I'm talking about consistency, if you're a lady and you like wearing makeup, guys, you can just see that eyebrow is not matching that one. So conceptual framework ensures that we don't have these surprises where the eyebrow is bigger than the other one in financial statements. So I just thought I could put this to just make you understand in layman's terms what is consistency, that there must be similarity of concepts year on year. You can't be reporting bank charges as part of other operating expenses this year. The next year you're just removing it, you are reporting it solo. What informs that? What informs that? So you just can't do as you please in financial reporting. Have consistency. Okay, so the detail, so now going deeper into what is in conceptual framework, I'll just be touching on that, and then I'll be having one-on-one presentations on each concept. So the conceptual framework will it dictates what is the objective of us doing financial reporting. Who needs these financial reports? Financial reporting, guys, it's your set of financial statements. Your investors need this, the government need this, the revenue services needs this. So it talks, why do we need to do this? And what is the expectation by the shareholders or the owners of the business in terms of financial stewardship? And it talks about what are the characteristics, the qualitative characteristics of useful financial information. I did share some of those, which is timeliness, relevance, substance over form. There's many, they are limited, but there's many when you are elaborating many things that come out of these characteristics. And then it defines for you. And guys, if you're doing accounting, you can't come with your own definition of an asset. It must be within the parameters of what the conceptual framework says an asset is. You can't be innovative. That's the thing about accounting. It doesn't give you much room for innovation. You just follow the rules. So the conceptual framework has already set a rule for you. What makes up an asset? What makes up a liability? What makes equity? What makes income? What makes expense? What makes up expenses? And the criteria used to ensure that we are using the right recognition method in identifying these elements, and the derecognition of that, the measurement of the basis, and also the presentation and the disclosure of those in the financial statements of the assets in the financial statement, assets, liabilities, and those. It's not enough that you identify this asset, but carry the process through. When you're doing financial accounting to qualify as an accountant, you're not just the diagnoser, but you must also know the beginning and the end of the process. That's why I was saying the concept informs the process. It's not the other way around. So once you've identified that this definitely is an asset, this definitely is equity, then the process of recording, the process of recognition, of recording and disclosing in the financial statement, it must take place. Guys, I hope you understand conceptual framework now. Please share this with your friends. Please share this with your family. This is Teacher Patty. Bye.